Oh, absolutely. That's true. Thank you very much, Mangalam. And that's exactly what we're going to discuss. Black gold has plunged to its lowest level in more than a year on growing worries of oversupply ahead of a much anticipated OPEC meeting in Vienna on the 6th of December. What does all this mean for India, which is so dependent on imported crude oil? Arvind Sanger, Managing Partner of Geosphere Capital Management, and James Glassman, Senior Economist at JP Morgan, join us today all the way from the United States. Good evening, gentlemen. Thank you very much for ending your Sunday with a chat with us at India. Well, James, first to you. Is this a growth scare that's pulling crude down, or is it just a miscalculation and a tiff which Trump has used to his advantage with the Saudis? Is it a supply issue rather than a demand issue? James? Okay, I think we'll have to redial. Well, Arvind, the same question to you. Should we look at as take this as an unalloyed benefit for India, or does this come with a growth scare?
I think it's an unalloyed benefit for India. I think the growth scare is somewhat temporary and minor. And what we had is, as the US dollar went up and oil prices went up sharply, you saw some slowdown in demand. And I think that the sharp correction, 30% plus correction in oil prices over the last 5 or 6 weeks has completely negated that growth concern, in my opinion. Yes, there is some moderate slowdown in economic growth out of Germany, China. We've seen some signs of some slowdown even in the US, but those are very modest and they're not by any chance recessionary. So I think the bigger problem for oil is the growth of shale oil out of the US has been astounding. And then on top of that, I think the Trump administration has pulled a fast one on the Saudis and the rest of OPEC and Russia by getting them to increase production and then giving waivers to a number of countries, including India, on the Iran imports. And the latest, to add insult to injury, is Trump using his willingness to look over the Khashoggi affair and protect MBS from a lot of anger and clamor for sanctions amongst U.S. congressmen, and by protecting him and asking for a quid pro quo of lower oil prices. So you had, number of factors come together in a dramatic fashion, and clearly those, certainly those supply overhang of both Saudi and of shale is an unmitigated good for India.
Okay. Arvind, good morning. There's been decent amount of FII inflow into Indian market. Now, just looking at the internals, the Nifty is up only 1.3% this month, but in dollar terms, it's up about almost 5.5% because of this big rupee strength for this month. You reckon this FII inflow is tactical in nature, or do you reckon that perhaps there's serious amount of long-only money flowing into India once again?
Yeah, I think that, if the scare that the Indian markets got both on the currency and on the current account deficit and every other growth front, oil was a big component of that. And I think that receding certainly provides a tailwind for the Indian market. You have some negatives still there. You have the, domestic financial conditions tightening because of NBFC. Financing issues, and you have elections results which are coming up in the next few weeks for the state elections. So, and then you have the national elections coming up by next May. So I think those headwinds remain, but I think the major economic headwind from overseas, which was both the currency and the oil hit, I think that certainly has receded, and therefore it does make India a little more interesting. Although its own growth challenges need to be solved, but I think. Some investors might be willing to look through near-term uncertainty and look into, FY20 and feel a little better about the growth outlook in current oil price environment.
Totally. Arvind, hi, good morning. Some of those investors include the likes of Morgan Stanley. I mean, Jonathan Garner has just put out a note this morning where they're double upgrading emerging markets, and within that, their overweight countries include India. What would your own version be? I mean, is this a good time to be increasing allocation to a market like India? And if yes, what are the interesting pockets to look at?
Well, I think, yes, as some of the biggest growth concerns have receded, and even on the domestic NBFC front, I think the worst is behind us. And while we may not have the go-go era back again of what we had a couple of months ago, the type of growth that the NBFCs were generating, but they still have avoided a crisis coming out of the IL&FS situation. So I think that, therefore, I think, some of the NBFCs that are oversold look interesting to us. But I think, a number of companies in the domestic economy which benefit from consumer spending growth in the rural space, we think some of those could be interesting. And if there are NBFCs that benefit from that, that's a double positive. And then I think we find select, small and mid-cap names are also interesting. Obviously, the mid-cap names have sold off a lot more than the large caps. So I think there are some opportunities there as some of the clouds recede on the currency and oil challenges.
Okay. Do stay on, Arvind. We have reconnected with James Glassman of JP Morgan. Good evening to you again, James, if you can hear me now. I wanted to ask you, as a global economist, how are you looking at the crude fall? Is it sustainable? I mean, or is it as ephemeral as 86 was? And if it is sustaining, do you see a major shift of smart money to countries like India?
It's helpful for India, of course, and it's helpful for all the consuming part of the world. Of course, it's not such good news for producers. But I don't know. It seems a little exaggerated to me. And I don't know exactly what the dynamic. It seems every time. It wasn't but a few weeks ago when everyone thought oil was going to be going to 100. So I think, I personally think maybe it's gone a little overboard. Maybe the issue has been all these sanctions on Iran. People were given many waivers, and so I think OPEC probably is going to be making some kind of effort to try to stabilize things. But it's helpful for now, and I think to me the good news for the global outlook. I mean, there have been some disappointments in Europe. There's been a lot of uncertainty caused by all this trade tension between China and the U.S. I think there's a chance that the two at the G20 meeting may try to diffuse some of this tension. But I think for all of us, the constructive backdrop is the inflation trends are nothing. That they don't call for aggressive tightening by central banks. To me, if inflation remains benign, that's a pretty good story. Creates a pretty good backdrop for emerging markets, for the developed economies, and I think there's a reason to believe that maybe some of this negative tone that's kind of erupted in November is maybe a little exaggerated.
Okay. Arvind, the other important issue is, in terms of sectoral flows and sectoral moves, we went through a period where exporters did really well, and now we are once again seeing domestic stories making a comeback. Your thoughts on how to approach the Indian market tactically now?
Yeah, I think one of the things I think your other speaker just talked about is I don't think we should get carried away that oil is going to stay, as low as it is right now. So I think one needs to be somewhat tactical and patient in terms of, not completely going from export stories to completely domestic stories. I think what it does do is if the inflationary and the trade war and the oil price and the currency fears are receding, then it allows for a little more balanced portfolio between, some of the good growth stories globally, because I think global growth is not rolling over, as well as, some of the domestic-oriented sectors. We think that, with the elections coming, some of the rural sectors could be beneficiaries, so either NBFCs focused on rural or companies that benefit from rural demand would be beneficiaries. But we think, some of the longer-term stories that we've liked, whether they be in, infra space or otherwise, I think look interesting too. So I think, sectorally, it had gotten very narrow where people were playing only the export-oriented sectors, and I think that there is a chance to broaden that out.
Okay. James, coming back to the macros, the other big theme that everyone's talking about is the fact that the differential between the US GDP growth and the emerging market growth, that differential is sort of narrowing now, and that makes emerging markets a bit more attractive as we head into 2019. Would you concur with that view?
Yeah, I think that's right. And what we find here in the U.S., whenever there is something going on that is boosting domestic demand, much of what Americans buy is made abroad, and so it kind of spills over. So I think when you see a region like the U.S. picking up speed, you get a feeling that within a short period of time you're going to see that strength spreading to other regions too. So I think the 2019 outlook is pretty favorable actually for the global economy and for the emerging markets.
Okay, that's good to hear. James Glassman, thank you very much indeed for joining us, and sorry about that technical mishap. Well, Arvind, actually a similar question to you. Do you see more smart money chasing India now, especially Indian bonds? I mean, we saw a huge outflow. So now with this inflation-sensitive news, would you see a return of a goodish amount of money to Indian bonds as well, and therefore probably a 7.5 on the 10-year or even lower?
Well, I think there are two sides to the bond story. There's the U.S. rate cycle, and then there's the India interest rate and inflation and currency cycle. So on the U.S. rate front, I think we have to analyze what's likely to happen. And, there is some growing expectation that Fed may not be as aggressive over the next few rate moves as, so the expectations have changed quite a bit. And therefore, the expectation is Fed might, take a few pauses along the way between, rate decision this month and then, rate decision in December and then rate decisions in 2019. So if that happens, that clearly makes, non-U.S. bonds attractive. And India, with its, currency stabilizing and with the oil scare getting a little bit more settled, is likely to be a beneficiary. So I think for both those reasons, you're likely to see some inflows into emerging markets bond and certainly into Indian bonds.
Okay. And finally, Arvind, you refer to some of the NBFC stocks having fallen a goodish bit. Are you less worried about that space as a whole after that turmoil post-IL&FS and the steep cuts we saw with many people not willing to roll over their commercial paper?
Well, it seemed like there was a lot of rollovers that were successfully done in October and November. So at least any kind of a major eruption of a follow-up crisis has been avoided. So that has been avoided. I think what needs to be looked at closely is what is the business model, because the funding cost for NBFCs is going to rise, and for the more kind of wholesale kind of lenders is going to rise more. So I think one has to be more selective in looking at which NBFCs. I think the kind of buy all comers and all NBFCs worked more or less in the pre-IL&FS crisis mode is no longer the case. And we just don't want to buy value for the sake of value, but we want to buy companies whose growth and earnings model is not significantly impaired by the fact that their borrowing costs are going to go up, and the ability to lend to some sectors is going to be severely constrained.
Okay, Arvind, always a pleasure speaking with you. Thank you so much for joining us on Bazaar, and we hope to speak to you again very soon. Well, that's the word coming in. The consensus view is that emerging markets are looking attractive now, with crude falling a whole lot and growth picking up in emerging markets. But crude is below $60 a barrel, and so it's only pertinent that today we celebrate Prosperity Day, a special initiative in partnership with the National Stock Exchange. Every month we speak to the best minds on the Lal Street to decode the mantras to help investors benefit from successfully investing in the stock market. So don't miss this opportunity to learn from the masters, the best tips to invest and enable your journey of wealth creation. Catch our special coverage all through the day only on CNBC TV 18.